Welcome today to Trading WTF. Not what the F, but where to focus. We're streaming today on TradingView, Twitch, YouTube. Our hopes and goals are to guide traders on where to focus their attention. Trading can be so difficult with so many pieces of information flying by you at any given moment. What do you do with them? How do you determine where your trade is going and how to protect your capital and make some profits? I'm Michael any given moment. What do you do with them? Scandinavian Capital Markets and FX brokerage. And today we are joined by Steve Ward and Jamie Saettele. Going to give you a quick little intro, and then we can jump into some fun. Steve is a trader, performance, and psychology coach who has spent the last 16 years working with traders and fund managers at investment banks, hedge funds, asset managers, commodity trading houses, utility companies, and proprietary trading groups across the globe. Prior to starting his work within the financial sector, Steve provided sports psychology coaching to elite athletes and teams in over 30 different sports across the globe. Going to give you a particular intro, extreme, and action, and we can jump into some fun. And he has also provided psychological coaching for professional poker players. Steve is the author of Bulletproof Traders, Trader Mind, High Performance Trading, and Sports Betting to Win, and has written many articles for leading trading publications. He co-managed a team of 45 proprietary traders in London, was the consultant trading performance coach to the BBC TV series $1 Million Traders, and spent a number of years trading stock indices and FX on his own account. Jamie Saettele is a senior technical analyst at Scandinavian Capital Markets who provides daily technical outlooks to our clients. Throughout his career, Jamie has been sharing his knowledge with others. He has contributed to Daily FX, Investopedia, Technical Analysis of Stocks and Commodities magazine, and written a book titled Sentiment in the Forex Market, published by Wiley Finance. Jamie is also co-founder of SB Trade Desk, a foreign exchange research service, and works with the inflation hedge fund at ABFM, focusing on market research, portfolio strategy, and trade execution. Jamie graduated from Bucknell University in 2004 with a BSBA in accounting and was a 4-year starter on the water polo team. I think we got lots in common here today between sports, betting, trading. Maybe let's start with a little bit of some betting because we want to make sure we're trading and not gambling. So maybe we can start with a little bit of what gambling is and what trading is, and I'll pass that off to Steve.
Okay, thanks, Michael. I think it's an interesting question, and certainly when I was working in the world of sports betting, much of sports betting is probably seen as gambling. So I think it's down to approach. For me, I guess what I've noticed when I work with people, it's about approach, it's about mentality. So if I think about poker, which I think again can be professional or it can be done as a gambling activity. Betting the same, trading can be the same. I think probably for me the differentiators are that the person is clear about the reason why they're doing it. So am I doing it? Is it for fun? Is it hobbies and interest? Or am I trying to intentionally use this to generate money in the long term? Once I think the intention is clear, then I think that differentiates between and what I'm doing it for and what I want from it. That will determine things such as how carefully I obviously manage my money, the risk that I take, how I respond to the ups and downs of those activities. So I think really for me, it starts off with a distinction about what I'm doing this for. Then it comes down into if I'm doing it professionally, then it's about the approach, and it's probably about just being very clear about, I think the core factor is probably around how I manage risk versus the reward, being clear on that. And I think, it's a commitment. I think if you just, a lot of gamblers probably are doing it. It's a fun hobby. You turn up, you pay and play, and probably lose in the long term. I think if you are doing it professionally, if you're doing it seriously, then there's a commitment to learning and to mastery of the craft plus the mind that goes alongside that. That probably doesn't happen just in a general gambling environment, perhaps.
Well, yeah, I know when I go to a casino, I'm going there to lose some money, and I make sure I put aside exactly how much I plan on losing, and if I make some money to pay for my meal, then I pull my cards from the table. And aside from that mastery, I'd have to learn how to count cards, right?
Yeah, well, I was going to say, going in on what Steve said. So, in Michael's question about gambling and, trading or even investing. So, poker is a good example of being closer to trading, right? It's a game of not necessarily probability, but uncertainty. Roulette or blackjack, for that matter, is probability. That would be more gambling to me, especially something like roulette. Once you get into poker, right, there's a lot more orders of magnitude. Yes, there's 52 cards and there's all these plays, but look at the professionals, right? The guys who do this and make money consistently. When you get to that final table or whatever, a lot of these pros, right, you got guys with the sunglasses and all that stuff, because there's a lot more to it. You've got the bluffing, all that stuff. It's not just pure probability in the cards. A lot of novices focus on just their cards and what they have, right? It's not a computer model. We're not programmed, right? There's a lot more to it. Now, to the next level, you get to markets and trading, and there's even more orders of magnitude in terms of uncertainty, right? The hand doesn't end, right? It's much more difficult. It's like the next step. But I would say that there is something to be said for making similarities with a game of uncertainty. Once that human decision is made, it becomes emotional. And I would apply it to poker, trading more to poker, as far as playing it, like a game of uncertainty rather than just a game of chance, if that makes any sense.
Jamie, it reminded me when you was talking there about how probably there's something to do within that, the relationship between skill and luck, and in what proportions generates the outcome. So obviously, in roulette, it's purely probabilistic. There's not really any skill in. You can't, the croupier's spinning the wheel and so on. It's out of your control. You're betting purely on a set of outcomes you have no control over. Once you start playing maybe into cards, blackjack maybe to a degree if you're card counting, but certainly in poker, certainly in trading, certainly in investing, and even in sports betting when it's done professionally, there are lots of skills you can develop, the strategy skills, psychological skills, obviously knowledge you can acquire that begins to put some edge potentially in your favor. So I think there's some controllability over the outcome. There's always going to be some element of luck and randomness. I think we can't take that out of any of those, as Jamie said, the uncertain contextual activities. But I think you can build the skill, and probably being aware of that, of where you can play, where there is a skill element, and then doing the work to build those skills, probably again is maybe part of that determination between whether I'm doing it as a gambler versus am I doing it more as a professional.
I would say that'd be a great kind of dividing line between gambling and trading, or gambling is something where there's no edge, and trading or speculating is something where you can get an edge, but you have to work to get it, right? And again, blackjack would be a little bit of edge maybe if you do it the right way. Poker, you can get a lot of edge, depends the variables, who you're playing against, all that. And then markets, again, who you're playing against, who's on the other side of your trade, because you are in control of making that decision. Are you bluffing, not bluffing, all that. So yeah, I think that's a good dividing point. Is edge possible? Right.
Well, I guess in terms of speaking about gamblers and traders, Steve's worked with fund managers, corporations, athletes, and traders. What are some similarities and differences between and gamblers? What are the gamblers? What are the similarities and differences between all those characters over there?
I'll put the gamblers maybe to one side and just maybe focus on sort of the traders, the fund managers, athletes. I think, I'm saying that in terms of, I'm saying gamblers in terms of, let's call them kind of casual speculators and so on. But if we look at the people that are kind of professional in their approach or trying to do something to a serious level with commitment, and we look at obviously therefore those categories, I think some of the similarities are that whether you're playing sports, whether you're playing poker, whether you're playing the markets, either as a trader or an investor, there is a skill set, a knowledge set, there is a craft to be acquired. So there is at the basic level probably a commitment to the mastery of that craft, which I think is shared in common. And probably at the high levels, there's an enjoyment in the process of actually going through, the steps and the process of getting good at whatever your context is. There's probably something within some of those domains around maybe being competitive, either against self or against others, but maybe some kind of driving force to, to kind of be the best you can be, or to be the best, and different people maybe angle slightly differently. I think you've got to be a good learner across all of them. So I think the better you are at learning, the faster you can accelerate and the better you can perform over time. I think resiliency in all domains, sports, poker, trading, investing, you're going to be taking losses. It's not always going to go to plan. So you're going to need some methodology for how you deal with things when they're not going well, whether it be the emotions, the thoughts, the body. Confidence probably plays a factor, or convictions, we might call it in the trading and investing world. So I think they're going to be in common. Then I think if we separate probably poker and trading and investing away from sports in terms of what's different, is I think the level of uncertainty, the fact you're taking financial risk, there's large levels of ambiguity, uncontrollability. If you're a swimmer and you're doing the 50-meter freestyle, there's probably going to be 6 or 8 lanes, maybe 10. You'll know in advance it's going to be 50 meters. You're all going to be doing freestyle. It's not going to be 55 meters. It's not going to be 47. If you're playing golf, the golf course isn't going to change in its structure while you're playing the game. So I think there's a little bit more predictability. You know when you're going to play in sport, you know how long you're going to play for, whereas in the markets and in poker to a degree, there can be this kind of ongoing, as Jamie was saying earlier, never knowing when it's going to change and so on. So I think there's some things that are similar and there are some nuances that are different. And I think primarily, again, a big difference is obviously trading, investing, poker are very cognitive activities, and obviously sport largely within the body, obviously does vary from sport to sport, but there's a very large physical component. And sometimes in sport, we want a quiet mind. And the mind gets in the way when it's too noisy. And obviously in trading and investing, and poker, we're tapping into those cognitive abilities. So I think, some very similar attributes and some that are quite different.
Yeah, I would go focus on some of the similar attributes to, playing a sport at a high level and trading. So, when you play a sport at a high level, the game is like the trading, right? All that happens before is your training, right? So all the practices, the two-a-days, that to me would be analogous to your planning in trading, right? Your research. Good traders, I feel like a lot, they don't just sit down in front of the screen and that's it, and they just start clicking buttons, right? You're not always playing the game. You have to be preparing. You have to be getting ready. So in that sense, you're planning, your preparation, you're running your scans, you're going over your levels. That's like your practice. You're getting ready for the game. So in that way, they are similar because you have a framework. Now, you can plan for all this and you can have your levels mapped out and everything, but something is going to happen every day that you don't expect, right? Because you're just getting ready. And that's similar to a team sport. So, you can plan to run this offense or whatever, or this defense, but maybe someone, just use the sport that I played, water polo, right? So you can plan that you're playing against man-to-man, but maybe they run a drop, right? That'd be like basketball. Maybe they're running a zone instead, right? So you have to react to that. So you have a framework with which to work, but you still have to make decisions, human decisions on the spot. So that's similar to trading. I think that'd be more similar than, Steve gave the example of swimming, which would be less similar because, again, it's very defined. You're going 2 laps back and forth. You're not really making a decision. There isn't that the ability to make a decision, right? That's it. You know what you have to do. No one else is coming at you. So there are the similarities between, trading and team sport in that there is uncertainty. And I keep coming back to that word uncertainty, but that's really what it is. And you have to be ready to make a decision.
And I guess speaking a lot of uncertainty on both sides, how would you advise the traders to really focus in and be able to block out all of that noise that's coming in and that uncertainty that they're taking into account but doesn't affect their game or anything like that? How do traders hone in on that to help eliminate the uncertainty?
Well, so, and this is not my, domain as far as, Steve would be able to speak to this probably a little bit better, but as far as, playing sports back in the day at a high level, I would say the training, right? Train yourself as a trader, right? That's going to mean, putting all the work into it as far as not just the mental work, but, the physical work. Get your sleep. You got to be prepared to make those decisions, because trading is in a way a physical endeavor. I don't mean like being on a pit or something like that, which doesn't really exist anymore. I mean, like, you're going to feel certain emotions, when you make a decision in your trading. So, it might not feel good. Like, you make a crappy trade and your body you feel bad because you just lost money and whatever. Well, you have to have your body, prepared to recover from that and do well. And if your, body's not in great shape, I don't mean like you're, like an athlete shape, but I mean, if you're not getting sleep and you're drinking all the time and this and that, you're probably not going to react the right way. So there's a lot that goes into that. So that would go into practice or training or planning your trade, right? All that stuff, right? Being prepared to make that decision, being prepared for your body to accept the emotions that you're feeling in order to recover. That's where I would go.
And I would follow up and agree with Jamie. I think we need to realize that trading is a physical activity. It's a mind and body. There's a craft, then there's the role of the mind and body, sleep, exercise, rest, recovery, nutrition. They all impact our decision making and our risk taking. The brain sits inside the body. It's about 2% of our body weight, 20 to 25% of energy consumption. So, it's a cognitive activity, so the brain does need to be fueled. It needs to be ready. And as Jamie was saying, emotions are sensations in the body. We give them labels and names, but they've always been sensations in the body. So there is a physicality to trading, which maybe people aren't fully aware of, but doesn't matter. Preparation, I would agree. I think preparation is key. And around uncertainty, Michael, particularly, I think there's a mindset factor where people need to accept up front that there is uncertainty. So you need to kind of, if you're going into trading and into markets and investing, you have to go in knowing it's uncertain. Things can change. Things will change. They will not always be as you expect them to be. And then you can prepare for that. When you're planning a trade, I think one of the challenges for some traders is they make a trade and they have one idea about what they want to happen. So they're kind of in their mind, they're fused to this idea that, I want to get in at this price. I want the market to go up or down based on whether I'm long or short, and I want to get out at a certain price. And that's what they're looking for. And I think what's helpful when people are planning trades is what I would call planned uncertainty. So be thinking about, okay, this is one possible outcome of what might happen, but what else could happen once I'm in that position? So what are the alternative stories essentially that could unfold in the market? And if they do happen, how am I going to respond to those appropriately? So I think if you go into a position already accepting the fact that there are multiple different possible ways that trade can play out, you're essentially accepting and acknowledging the uncertainty, which is good because that will give us a bit of exposure and reduce the psychological impact of it. But it also enables us to then plan for what happens if any of those scenarios do play out. And I think that's one very practical ways that a lot of people can just start to mitigate the effects of uncertainty on their decision making.
And there's a saying that a person who lives their life according to emotions lives an effed up life. And I guess, are there any good emotions in trading, or how do we block those out when those emotions come up if they aren't any good?
I would say all emotions. It depends how you look at it, right? Are you prepared to accept? Because it's going to happen, right? You're going to have emotions, good emotions, bad emotions. One, I guess, is before you act, you're going to have different emotions. So, for example, this morning I had a target to take some euro short, right? Been in this for a while. Finally hit the level, 119.70. So that was the training, the part say, I'm ready to do this. This is, what I'm gonna do. But then I'm looking at it and I'm like, man, I was like, this looks like it still wants to go, right? Now we're just starting to break down. Now I'm going to stay in the trade. Well, that emotion right there of, man, I feel good. I feel confident. That from experience, I know that's probably tells me that I should stick with my plan, because now I know what's going on, right? Now I feel great. Well, there's more variables than that. Maybe just take off part of the position, right? And then, okay, now I feel good. Now I can, now I feel better. Because, man, if I would have stayed in that position completely, even though we got to the target, and then it would have turned around and ripped, right, the next day or two, I would have had very bad emotion. I would have very bad feeling and discouraged, right? Now that's going to happen too. That's okay. I know to deal with it, but it comes from understanding those emotions. So like this morning, again, we got to that level. Now I'm feeling really good and really confident. Well, historically for me, that's a sign that you should probably go against that emotion, if that, you know what I mean? Because now I'm super confident. When you're super confident is when you're going to get knocked down. So there's one way to understand your emotions. So you can't get rid of them, right? We're not computers. You're going to have to deal with them. So that's my 2 cents on emotions.
Steve's smiling over there.
Yeah, well,
okay.
but only because Jamie saved me having to do my long speech on what I think. I mean, I'm in complete agreement. So when I first came into working with traders 2005, in the early days and even into 06, I was bombarded with requests as kind of a new guy into this sort of trading psychology world to help traders to trade without emotions. And I was like, well, how's that going to happen? Without going into brain surgery and starting to remove parts of your brain. I mean, how are we going to remove them? It's part of the human condition. So, my work, particularly as it's evolved over the years, and we know this from neuroscience now, I guess the science backs up what we maybe know intuitively, you can't get rid of them. Emotions are part of the human experience, and we have them because they serve a purpose. They provide information. The way I frame it to my clients is emotions are data. If you're feeling confidence, why is that? If you're feeling fear, what is the fear? Be specific. Is it a fear of loss? Is it a fear of missing out? And why might that be? What could be the message behind it? So when I'm working with clients, we're really trying to develop emotional awareness. So be aware of what you're feeling. As soon as you've got an awareness of emotion, it's a bit like you get a bit of distance from it. And the way I would kind of, as a metaphor, think about, you can be in the river, so you're going where the river takes you, or you could be above the river, maybe in a helicopter looking down, so you can still see what's going on, but the experience is different. And I think once we start to be aware of our emotions and we start to monitor and notice them, we can be in that observer perspective such that we're having the emotion, but by having that bit of distance, we get the flexibility and the space to actually then ask ourselves, well, why is that emotion showing up for me right now? Is there anything I need to do to attend to that? Is there some data here that maybe I want to utilize or not? And then it gives me that flexibility to either maybe go with the emotion-driven response or not to and do something different. The challenge, if we get into emotions of good or bad, positive or negative, is if we frame it as bad or negative, we'll create an aversion. So once we notice maybe a sense of some fear, we try to avoid it. So if I'm in a trade and I'm in a losing position and I get this strong sense of the fear of losing, the way that I can avoid feeling that fear of losing is to stay in that losing trade. So now in the short term, I avoid the fear. I avoid the fear as such, or the feeling of fear, but I stay in the losing trade. Now in the short term, I feel better, but in the long term, as that trade goes against me further and further and further, I could be exposed to significantly more pain. Boredom's another one. Boredom in the short term. How do I get rid of feeling bored? I'll place some trades. So the action of placing trades reduces in the short term the feeling of being bored, but I might end up with a load of bad trades in my book that now cost me money. So I think that if we, historically, when we think about emotions as good, bad, negative, positive, is the danger is that we create this kind of aversive tendencies. And when we look at a lot of unhelpful trading behavior, quite often people are trying to avoid feeling something uncomfortable. It was actually what we want to be able to do is get good at feeling the uncomfortable. So be aware of it, acknowledge it, work with it. And then primarily the goal is to be able to have the emotion, but without that emotion having you, which is the phrase that's often used quite a lot in kind of the psychological world. So it's not so much about getting rid of them. is about being aware of them, but still maintaining the ability to take effective action, even though you're feeling a particular emotion. Which means if we can get that bit of distance, if we can notice, I'm having the feeling of confidence, I'm having a feeling of the fear of missing out, I'm having a feeling of boredom. Once we notice it as a feeling we're having, we can start to change our relationship to the emotion, and then what happens next. So we can become a bit more responsive and a little bit less reactive, perhaps.
Yeah, and that, like, all that, like what you just said, goes into, you know, the training, right? Training yourself to, you know, understand, like, first accept that you're going to have emotion, and then understand what they mean, right? As you said, data, taking that data in, processing it, and then using it to your advantage.
Exactly.
You know, a lot of people fail, not because they have bad, you know, signals or analysis or whatever. That's the small part, right? It's because they don't deal with their emotions and process them correctly, and then, you know, you have no chance after that. So that's the biggest part, for sure.
Well, speaking of training, I guess I can think of golf. Whenever I go golfing, I just step up to the ball. I don't take a practice swing. I just, so I'm like, why waste a good swing if it's on a practice swing? But but thanks to my wife during COVID, she's like, "Where are you going?" And I'm like, "Oh, I'm going to golf with my buddies, baby." She's like, "Oh, you're taking me with you. Get me out of the house." And I was like, okay, let's go to the range. And as I went to the range and I started practicing, I got better with each club. I could figure out exactly what kind of range I'd hit with each club. So I'm kind of seeing the importance of training. Could we go a little deeper into what training and actual trading is, the difference between the two, and what kind of goes into each of training and each of trading in terms of the trader's mindset?
Yeah. Well, also, I was just reminded of something on the last subject, then we can get into the trading thing.
Okay.
In the first Market Wizards book, Paul Tudor Jones had a quote. He said, like, when he had his epiphany, right, it was to come, to go home each day, to make himself feel good, right? Or something like, I don't know the exact quote. There was something along those lines, right? Instead of carrying home all these, losses and, carrying all these positions. And, it was like, that's stupid. I feel bad doing that. So why don't I not do that? Right? Why don't I not take these huge losses? Right? Why don't I trade small first? Why don't I, take tight stops or, that, this and that. Now, it's going to be different for everybody, but that's a perfect example of learning from your emotions, making your brain feel better. So you can't do this and feel crappy every day and feel stressed out all the time. That's not going to do any good, right? And you're not going to be able to move on. So that was just a quick example in our last conversation.
Well, that probably leads to trader burnout. That's how traders just burn out and drift away.
Yeah, sure. You're going to need a break too every once in a while, just like an athlete. So getting back into the training thing, right? Before, a big swim meet or something, we'd always taper our bodies, right? Relax, let your body recover. You need to do that for trading too. You can't do this, 24 hours a day. I mean, you could, but you're not going to last very long. So it's important not to sit in front of the screen all day either. You'll be tempted to do things that you shouldn't be doing, right? The temptation is certainly there. You see the prices moving. Oh, if I just take a quick 10, 15 pips here, well, that turns into a 100 pip loss. So, the differences between training and trading, it's like, look before you jump, not when you jump, right? So the training is preparing yourself to act when given that if-then statement that Steve was talking about earlier. If this happens, what am I going to do? If that happens, what am I going to do? You can have all these plans in your head, but you don't know exactly what you're going to do until faced with that decision. Kind of like a quarterback reading all his routes, and getting, attacked, charged by a 300-pound defensive lineman, right? You can practice is totally different. You have a great, guy with an arm and, he's wearing the red jersey and stuff, and not getting hit. But once you get into the game, it's a little different, right? So I don't know. differences are you can't really tell until faced with making that decision, I would say.
Yeah, from my side, I mean, a couple of things I'll pick up on. One, I mean, Michael, you mentioned this, and Jamie picked up on it. Just the idea around, rest, recovery, and energy and fatigue. Really, I mean, I've been involved in a few research projects where we've hooked traders up to biometric devices, looked at their levels of sleep, quality and quantity, stress levels, again, quality, quantity, recovery levels, quality, quantity. So I've been lucky that I've been able to see directly in real time the impact that things like volatility or trading large positions that are going against you or for you, because both have an impact on your nervous system. But to see that in real time, and then to see the accumulation of that over time on traders' bodies, and we know that intense trading periods, big positions that go against you and for you, even all this, it impacts the body. You see it in the data, and it's unsustainable. It's why athletes have off seasons. It's why they obviously have time to recover between events. And actually, in the work that I do with my trading clients, we try and build that in. So we talk a lot about, the trading physiology and how we manage that, the importance of sleeping well. Sleep, when you're sleep deprived, it affects your risk perception and your decision making. So there's a big impact if we don't get the physiology right. And some great work by John Coates from Cambridge University around that. Wrote a good book called The Hour Between Dog and Wolf, if people are keen for a read. I mean, on the training and the trading side, I think for me, trading is a performance activity, the same as sports are, the same as poker is, and therefore there's a training element if you're going to get good at them. The question is, what do I need to train in order to get good at the craft that I'm engaged in? So trading has some skills that are involved. There could be numerical skills. There also can be execution skills. There's a knowledge factor based on the products you're trading, the markets you're trading into. There's all that domain as well. Then you've got obviously the psychological skills. You've got, let's call it kind of the body skills, the physiology. So if you look at what it takes to be a successful trader and to be able to sustain performance over a long period of time, then there's a skill level, there's a strategy, there's things around our state. So it's a pretty broad set of skills you need actually to do really well in a sustainable way. And I think the challenge for some traders is maybe they come to things in a bit of an ad hoc fashion. When I was involved in working with professional clients and we were involved on the training programs, much like it would be in sport, there's a structure, there's a progression, there's a continuity of learning, there's coaching, there's mentoring, there's training, there's feedback, there's analysis, evaluation. You're simulating, you're trying things out. So it's a more of a formalized process. And I think that's can be a big differentiator actually in people's success. How successful and how fast is down to the quality of the training experience. And actually, even like Michael, in your golf example, am I even focusing on the fact that I'm on a training path, or am I, again, intention? Am I playing for fun? Turn up, hit a few golf balls, whatever happens, or am I trying to get better at golf? Is that my goal? And if so, if I want to get better at it, what does that mean? And what do I need to practice and improve in order to see that I'm getting better? So it's a very different mentality and an approach once you get into training.
Steve, would you say in the studies that you referenced, when having people hooked up when positions were going for or against them, right, different sizes, all that, would you say that that's variable for different people? In other words, some people's emotional odometer, if you will, or sensitivity to market events and their own trading is some people's sensitivity is high, some's low?
Yes, definitely. So, and largely that were two factors really. One is our individual kind of disposition. So kind of our starting point genetically, kind of our risk tolerance as such. And the other one is kind of down to exposure and experience. So they did some research, might have been at MIT, Low and Repin a few years back now. They looked at FX traders under volatile market conditions and had them all hooked up to a variety of different sensors. And all traders had a higher level of stress as volatility increased in the markets, but the responses were lower in the more experienced traders and were higher in the novice traders, such that obviously, as you would know, back in your water polo game days, when you first start playing, each game is a bit new, you're not so familiar, but as you've played more and as you play more and more bigger matches, although there's always that element of stress, the familiarity to it, the exposure, you learn the coping skills, that dampens down that response slightly. So yes, yeah. Definitely individual.
Yeah. Well, it makes sense in that example, obviously, that, a more experienced trader during volatile conditions would be a little more calm, of course, and with it. And right off the bat, it would seem that, someone's very sensitive to, the needle moving just a little bit probably is not the greatest, but you probably also don't want to be too lax either, because if you start going against your position, if you will, you can't be too slow to react, right? I mean, so there's probably a happy medium there with how people's brains actually do work and process danger, if you will, or reward, risk and reward going for them or against them. You don't want to be like a little, terrier dog where you're yipping and yapping all the time, but you also don't want to be too slow to process what's happening, I would guess.
Yeah. Well, what I do with my clients is we actually run an assessment with them, a psychometric test which looks at their risk disposition. And it gives us I won't go into the micro details, but on a big picture, on a macro scale, we get a sense of their kind of preference for risk, so risk averse to risk seeking, and whether they're a bit more intuitive or whether they're a bit more kind of analytical. That's kind of our two axes. And then what happens that's interesting is because we are all different in our preferences for risk, what we see in trading in the most skilled traders or the most successful traders is what they've done over time is they have learned how to trade the markets in a way that lines up with their risk personality. So if you're very sensitive to risk, for example, then holding big positions over time, which gives you a lot of exposure to risk ongoing, probably isn't going to be very comfortable for you. Whereas other people at the lower end of the compass, as we call it, they're quite comfortable with large amounts of risk. Actually, they enjoy it. So they're able to hold those positions for longer, whereas those who are more sensitive might maybe put it into a spread, or they might hold positions for a shorter period of time and trade smaller but more frequently just to minimize exposure to risk and actually also to uncertainty. And those two often are quite strongly linked. So I think it's a case of finding a way of trading that allows you to express because all risk types have upside and downside. There's neither one better than another. It's just finding what we call risk congruence, the way that works for you.
Yeah, and I love that because it's, what you said, what works for you, what works for your brain. Because exactly. if you're trading in a way that's not compatible with your brain, then you're not going to be able to operate going forward. You're going to be difficult. Be all clouded and messed up. That's why it's not because one way is right and one way is wrong. It's because it's right or wrong for your own brain.
Yeah. And it's like with sports, right, Jamie? I mean, if you think about each individual, we've all got different strengths and weaknesses that are going to lead us into some sports we're going to find easier than others based on our, our builds and what we enjoy and our strengths and so on. So not everyone's going to be water polo player. Not everyone's going to be a games player. Not everyone's going to be, a high jumper or a sprinter. Everyone's going to have their own skills and strengths and genetics that will probably lean them into having more success in one niche or another. And that's the beauty of trading. Is there's so many ways that so many different markets, different products, different styles of trading that once you get a sense of who I am and what I'm trying to achieve, then you can start to think about where do I go to express that's going to give me the best. Well, A is going to be enjoyable, hopefully, and sustainable, but also bring me some success.
Yeah.
It kind of reminds me of a meme I just saw on Wall Street Bets earlier today. It was like one of the memes was, I miss the days of 60 to 70% volatility. What is this 2 to 3% moves in a day? This is nothing. I'm like, I don't know how long these guys have been trading for, but I don't know how long they're going to last for.
Yeah.
I guess I'll take that into, well, you kind of said you need your body to relax. How do you handle success? How do you handle failure? And then I'll ask Steve how you pick traders up when they've hit the rock bottom.
I don't know. You want to start with this, Steve?
Yeah. Well, I think, again, there's a lot of individual difference in people's kind of tolerance for the ups and downs of trading. Some traders have big swings in their P&L, and things, and that is demanding on the body because a big up creates a big positive stress response, excitement, and a big down brings you into kind of a real big kind of fear, anxiety, stress response, negative. So the body's really taking a hammering. Other traders and market makers are a great example of this, have a much steadier kind of, slow return over time, little highs, little lows, but gradual improvement. So individual style and preference is gonna determine really how big the highs are and how big those lows are and what your pattern is. But you've got to have the psychology to deal with that, and also the physiology. So people will find a way of doing that. And obviously what I try and do is give clients some mental skills and some physical skills to work with that. But I mean, just your strategy, how you manage your risk, all those kind of fundamental factors play a big part in that as well. And then when someone is down, has a big loss, or is particularly if they're going through maybe a period of drawdown, so it's sustained. For me, it's always looking at, well, what's happening here. So, it's happened. We've got to accept it's happened. That's the first thing, whether it's sustained or in the moment. Accepted it's happened. You can't change it. But what do we do now going forward? So, what can we learn from what's going on? If it's a loss we've already taken, then what can we learn from the experience? If it's a period of drawdown we're in, then what's the opportunity for us to kind of learn and grow from this experience? What can we be gaining from this that could be valuable? Other things we need to do to adjust or change or shift. I mean, typically, if a P&L goes up or down for somebody, it's either the market's done something different or the trader has, or both. So, we can start to look at, well, where did that come from? Whatever the outcome is, what created it? Was it something I did, the market, or was it a bit of both? And I think, for traders who have had a tough time, and again, it's very individual. Some traders are very good. They're quick to recover. And I've seen that in some of my hedge fund clients, and they've identified that as a strength they have. Other people, it does take longer to kind of process the emotions that go with that. And I think, again, going back to Jamie's point earlier, a lot of it really is about trying to set the game up so that it works for you. So if you know that you don't like taking big losses, then you need to moderate your strategy and your risk to allow for that. And I think, sometimes traders are too fixed in doing things in a certain way because they've read it somewhere or heard it somewhere, and it's working against them. And it becomes a painful, uncomfortable experience that's unsustainable. And I think the more skilled traders and those who've become successful, what they've done through exposure to losses and exposure to drawdown is they found ways of coping with it. And essentially what my phrase is, we want to find ways of getting good at it, because you can't avoid it. You can't avoid losses. You can't avoid even big losses to a degree, relatively big losses. You can't avoid drawdown. It's all going to happen. It's just building up the confidence that when they do happen, that you can deal with it. And that's partly risk management, it's partly strategy, and then it's partly having kind of the psychological coping skills that that you can deal with it, and a bit of optimism. Things will get better. It might take some time, a bit like with the pandemic. It's going to get better. It might take some time. And in drawdown, you've got to kind of deal with the brutal reality that it's pretty tough right now, but keep a sense of it will get better. And what can I be doing to be active in making it better? The danger is kind of a sense of helplessness or hopelessness, and just kind of, I'll ride it out, see what happens over time, as opposed to actively engaging and being involved in that process.
Mm-hmm. Yeah, and that's all part of the training, right? Not just studying the markets, but understanding how your own mind works. And you're not going to know until it happens. And then at that point, you try to work through it by understanding your own, your own brain. I guess as a practical suggestion, just for dealing with losses, I know like a lot of prop desks have certain loss limits, right? So, maybe loss limit for a day, a week, a month. So I've known guys who have hit their loss limit for like a month, say in the first couple of days of the month. You can't trade till the next month if that happens. So that would be a practical example. How to deal with losses? Just stop, and let you got to go back to training, right? Go back to practice. Means, go back and figure it out, whether that means probably a combination of going back and looking at your strategy. And there's a fine line between doing like something like that and style drift, right? Which now we're going to get into a whole different conversation. But yeah, so just because something goes wrong doesn't mean that you go back and you change your whole plan to trade. But maybe you just go and kind of relax your brain and get back into a better, a better place mentally, would be my biggest, advice as far as dealing with losses are concerned, which is probably much more important than dealing with winners, right? I mean, what a terrible problem to have, dealing with too many big winners. But yeah, that's my suggestion.
And I think tying into Jamie's point, Michael, as well, is being aware that when you look at a loss or a series of losses, is for me, it's essential traders have a good data set. They have good metrics over their trading performance, because if I move into, say I've had 5 losing trades in a row, now the big question is really, I mean, there's a financial impact on that. There could be an emotional impact, but is it out of the norm? You know, in my strategy, is it normal for me to have periods of 5 losing trades in a row? If so, I don't need to panic too much. If I normally only have 1 or 2 in a row and now I get to 5, then maybe the warning light needs to come on. I need to pay attention and start digging down a little bit deeper. Likewise, if my average losing trade is X units, then there's nothing really to worry about. I should be conditioned to deal with that. But if it becomes 2x or 3x, it's going to have a bigger impact. So what do I do now? And I agree with Jamie. Sometimes, you know, taking a break, taking a walk could be a minute, an hour, a day, a couple of days, a week sometimes, but letting the body and mind recharge and recover sometimes is what's needed. And I think individuals just have to find a framework that works for them, for how they deal with this. And again, I think you can do this up front. You can be thinking already, what is my process that's in place for dealing with losses and drawdown within my normal range? And what do I do that's different if it falls outside of that normal range, where maybe there's a bit more recovery and work that needs to be done? But also remembering that every single time you operate outside of the norm, you're developing skills that help you to operate outside of the norm. So even when it's really tough and hard, you're going to be gaining physiologically and psychologically skills and abilities that will make you better in the longer run. So I think that's really important to stress sometimes.
Mm-hmm.
I wish I had this conversation like 8 years ago when I hit my loss. It was like trading family money, and oh man, I lost it. I couldn't look in the mirror at myself, and I just wanted, I laid down on the floor like in the movie, like the guy in The Big Short, and I just was like, I wonder if this floor will open up and just suck me in. There's like no lower. How much lower can I go? And over time, I realized, you know, things get better, life goes on. You're still here. You can make it right, get back up, and get back at it. And then a buddy of mine said, "Oh, have you seen Tinder?" I was like, "Oh." So I found some success on that app, and you know, the success, getting some success always helps, and picks you back up. I don't know what the kids
on the positive. That's right.
Yeah, I don't know what the kids are using for as an app these days, but I'm sure it's evolved. I guess we touched on the Wall Street Bets phenomenon. I want to dig a little deeper. Wall Street Bet has like created a whole new generation of traders. Like, this is a new wave. This is like, and it's a wave. It's a titanic wave that's going on. And I really enjoy watching the Instagram posts of the guys in their boxers trading at home. Like, Mom, make me some pizza pockets, hey? I'm a millionaire. Those are fun watching. But how long can a strategy like that last for when 90% of the assets are controlled by 1% and the other 90% control the other 10%? How do they develop a trading strategy? Because GameStop went up to 600, but if people bought it along the wave, 200, 300, 400, and now it's at 100, they're sitting at a loss. What do? Diamond hands aren't really going to, make you diamonds of money if you're holding losses. How can the traders evolve to stay in the market, to make trading a reality rather than just a one-hit wonder?
Well, I'll start with this one. One, I don't think that there's a lot of traders that are, been created, so to speak, in this in these conditions and what's happened and whatever. I think going back to our first topic, you have a lot of gamblers right here, right? To be sure, there'll probably be some people that come out of this, and this was their exposure to markets, and it interested them, and they dug deeper, and they become, great professional traders, but 99.9% of these folks are probably just gamblers there for the action, and it will fade away, and that will be it. But
hey, we're getting another $1 trillion of stimulus, maybe. So, got another round 2, maybe. So
yeah.
How do they turn round 2 into something positive?
Yeah. I mean, I take it as, look, this occurrence with this Robinhood thing, this couldn't have happened. There's two things. One, to me, it's anecdotal evidence of some sort of a speculative frenzy, which does tend to occur towards the end of a bigger cycle. That's not to say that this is a day or a week or even a month or whatever where the market all of a sudden tops and we go into some big bear market. But just generally speaking, this has all the elements there. I mean, it's like I was in, high school and college back when in 99 and stuff, but like, you got all the price rocket higher in these cryptocurrencies and then this GameStop stuff, all that, it's kind of like the Beanie Baby stuff almost. I mean, my dad, who is a non, financial professional, he's sitting there on his tablet the other day asking me about marijuana stocks and cryptocurrencies. And he has never asked me about these things. I don't think it's coincidence, right? Retail gets interested, piles in towards the top, right? That's just how it works. At the same time, this crazy GameStop stuff and AMC and these other stocks, this wouldn't have been possible without the zero commission trading environment too, right? When something's free, people tend to kind of take advantage of it a little bit and overdo it. And that's what's happened here too. So, that's me rationalizing what's happened, I guess. But yeah, to your original question on this, I don't think there's a lot of traders in there. I just think it's a lot of gamblers. And I'm not sure there's a whole lot to learn and take away from it other than stay away from it because it's probably not going to end up that great. I mean, you just look at the volume on it, right? Like, were there some people that bought this months ago, GME or whatever, and sold out when this speculative frenzy hit? I'm sure there were. And probably a lot of those people were larger funds too. Were the retail traders that all of a sudden bought in when, on the message boards, all that stuff was going on, a day later, they're sitting on a 60% loss, right? I think it was 2 days ago, or maybe I was yesterday, 2 days ago, where GME opened up down 50%. So, their trading dreams are probably already over at that point. I don't know. That's where I'm at.
Yeah, I think my view on it, I won't have as much expert on the trading side of things, but my first instinct, Jamie, as yours was probably the mass of people on that forum wouldn't be what we would probably collectively classify as traders in terms of the professional sense. And there's probably a lot of collective frenzy in there, people jumping on through excitement and an opportunity. I actually read, I think the Washington Post did an article, I think either yesterday or the day before, and they quoted one of the posters on Reddit. Its kind of philosophy was basically win big or die, ! That was kind of the mentality. Now, for me, that's not, as we were talking earlier, I'm not saying that's right or wrong, but for me, that's a great contrast to, and I actually wrote a little post about this, which is going out tomorrow, with one of my most successful hedge fund managers I work with, whose kind of mantra is consistent returns with low drawdown. So when you kind of combine those two kind of different ends of the spectrum and you think about what that means for that person's kind of mentality, personality, the intentions and how they're going to behave, it's going to be completely different. So I just wonder kind of if you looked at who's on there and why they're on there, what the motivations and intentions are. I'd imagine there's a lot of people on there looking to make money fast. And in their mind, maybe telling themselves, and they're willing to lose money in order to do so. I'm not so sure the reality will be that when they actually have to solidify and take those losses, they'll be as happy as they thought they would be to take those losses. I mean, humans are not good. We are very bad at realizing what it's going to really be like in the future. We're always overly optimistic about how it's going to feel. So, I might go, yeah, I want to win big or die. I'm happy to die. But in the moment when I'm dying, it's going to feel much worse than I thought it was going to feel. So that worries me a little bit. I think a lot of people will have jumped on the bandwagon. We know that's not going to be good. But what was interesting for me was maybe the timing of being in the pandemic. People are at home. A lot of people are bored. They're on their phones all the time. And it's this gamification. It's just like it's another game to play. And I think it's been almost like framed that it's so easy to do. If you go back to the olden days, it couldn't have happened because you'd have to buy a seat to be in the trading pit. Unless you were really keen, you weren't going to put down thousands of dollars to buy a seat to go into the CME and CBOT. Then, of course, trading went electronic, but it was still predominantly in the domain of the professionals. Of course, then it transitioned and suddenly, in the UK, we've got spread betting, CFDs and so on, easy access to the markets. And now anybody of the correct age can access the markets, and that shifted it. but of course you were paying spreads and so on. And it's almost like, and this is like the next evolution, which is obviously, you know, zero commissions, ease of access, very much like a game, which again has some positives, I guess, but likewise has some negatives. And for me, when I first kind of started reading about, you know, the Robinhood and so on last year and the evolution of these platforms, my gut instinct, I'm not saying this is right, but my gut instinct was this feels like when they put casinos online. Because again, you know, if casinos of old, you had to physically go to the casino, you had to hand over your money, get some chips. You would see those chips disappear quite often. You'd have to go back, hand over more money, get more chips. It's a physicality of being there and doing. Whereas now, you know, you log on, you link your credit card to the account, boom, 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 it runs out, you reload it again, press red, press green, up, down, up, down, up, down. And it just feels like, you know, the slot machine's online. And that's what worries me, because that kind of speed and ease of access will be addictive for many people. And obviously a lot of these people, my senses, are relatively young people. Yeah. And I think, you know, it could start off with Robinhood and a bit of trading, could go on to online poker, could go on to slot machines online. So what worries me is, what does it start off that maybe, you know, has long-term impact on a lot of young people or, you know, younger people?
Kind of ruins it for them. Also, we talked earlier about difference in gambling and trading, right? You talked about what's your intention.
Yeah.
Right. Like, ask yourself, what do you think the intention of all these people on Wall Street Bets that literally opened up an account on Robinhood so that they could trade GME stock? What do you think their intention was? I doubt that their intention was, you know, to learn how to extract profit from the market and, you know, like you said, low drawdowns, consistent returns. That's not their intention, right? Their intention was, my neighbor told me about this, and last week he made $100,000, and that's what I'm going to do now.
Yep.
And now that, you know, whatever. So I don't know if, like, almost surely positive that almost all these people are probably not going to continue and they're not going to learn anything from it. But, you know, because that's not their intention. Their intention is not to learn from it anyway, right? This was just place it on red or black and roll the dice. Yeah. That's it.
And I think, again, you know, the pandemic, you know, the situation, obviously a lot of people are struggling financially or know they might be in the future. So I think people are open. I mean, I've seen, you know, just through my own sort of inquiries on my own email, the interest growing in the, you know, in the retail trade, in the general public, in terms of how can I make money for myself, either to top up my income or to potentially to have to replace that. So I think, again, almost like this perfect storm, whether it be, you know, market cycles, ease of access, the pandemic, people at home a lot, worrying about money. Suddenly, you hear this story, all starts to break. And like, yeah, I think like Jamie says, you know, it's as a guy said in the Washington Post, win big or die. I mean, I think that's some people's mentality is.
And it's also asking kind of the wrong question too. Like, how can I make money rather than how can I train myself to be able to, you know, give myself a shot at making money?
Yeah, exactly.
Rather than just, how can I make money? Like, well, first there's going to be losses involved too. So, you know, prepare yourself for that. So yeah, people come to it a lot with kind of the wrong mindset, I think, too.
Yeah, it's the new generation. I want it now and I want it easy. Don't make me think.
Yeah.
And I guess we're heading into the hour. There's a couple questions. I just want to post it to you. Thanks for the talk, guys. Anyone want to mentor me? LOL. Seriously. I'd say there's a couple books from Steve to read and from Jamie to read that they've both written. And any recommendations for how they can get in touch?
Well, sure. I mean, can always, you know, obviously my stuff is posted to Scandinavian Capital Markets all the time. We could also put like a message board on there, possibly. Who knows? You know, that would be easy.
There you go. Send Jamie a message through TradingView through Scandinavian Capital Markets. And Steve buys books.
Yeah, buy the books or have a look at tradeatyourbest.com. That's my I started this last year. Again, it was just a function of the pandemic, really, and having a bit of spare time on my hands compared to normal. So I launched a 7-session online trading psychology program. It's for retail traders specifically. So we're going to run the next one, starts mid-April. So tradeatyourbest.com if you're keen.
Yeah, those that question, or what if on TradingView, my TradingView name is just my name, no spaces. So JAMIESAETTELE. And yeah, I'll check that. Be sure to look at any questions that come through.
And there's one other question. Any favorites between Robinhood or Stash? I haven't heard of Stash yet, but obviously I've heard of Robinhood. I'll take that one. There's no such thing as free trading. So if what was something I saw the other day? If something's for free, then you're the product. So just beware of anything. I always prefer that someone tells me they're going to make some money rather than not. At least I know what's gonna happen, and I'm happy to pay someone for a good service. That would be my.
I am not either, but obviously, when you want to, some of the most important times to be able to put through an order or something, it seems to me like, seeing online, on Twitter, trading communities, whatever, the Robinhood has a tendency to maybe go down at like very volatile periods. So that might be a function of the fact that it's a free service, So I don't know. I can't really answer that question, just given the fact I've never used either Robinhood and I've never heard of Stash. But yeah, you pay what you get for, right?
Any final thoughts from you, Steve? From you, Jamie?
Or you get what you pay for. I just said that backwards.
There you go.
I think my final words, really just probably summarizing a few topics, is whether you're trading, investing, playing sport, playing poker, whatever your domain is, know why you're doing it. Be really clear about what your intention is, what you want to get from it. If you're doing it for fun, that's great. Then do it for fun, but don't beat yourself up if it's going badly, because you're doing it for fun. And if you're doing it seriously, then take it seriously. And that means you've got to commit to it. It's going to take time, effort, training, commitment. You might want coaching, mentoring. You're going to have to work hard for a long period of time if you're going to get good at something and make it sustainable. So just be really clear about why you're doing it, what you want from it, and then walk the path accordingly to what that intention is. Yeah,
to say it or rephrase it like in a little different way, if you treat trading and whatnot like a hobby, you'll get, you'll pay for it like a hobby. Hobbies cost money, so think about it that way.
Well, it's been a lot of fun. I guess the message for today is don't gamble, invest in yourself, take it seriously in order to become a profitable trader, and take care of yourself. That's the key.
Absolutely.
I'm going to go to the gym right now and take care of myself. I'm going to wear a mask. Don't worry.
Mask on. There you go. Excellent. Well, thank you, Steve. Thank you, Jamie. It's been an absolute pleasure having you and a lot of fun. Thank you.
Thanks, Michael.
All right. Thanks, everyone. Bye-bye.